heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, big tech on deck, Alphabet, AMD, Reddit after the bell. We'll talk you through what to expect.
And SoFi just came out with their own earnings this morning. We're going to speak with the CEO.
Plus, shares of Trump media surge again, getting briefly suspended amid the volatility. We discuss the election impact across assets. But first, we check on the markets, and I dial into what some say is indeed a Trump trade. Bitcoin powering ever higher, up another 3%. In fact, we're trading at the highest since March of this year. What happened in March of this year? A record high. Will we eclipse the 74,000 number? Of course, we hit just below that back in March of 2024. We're up 3%, and all of this being thought of as ultimately risk on, many feeling that potentially this is a signal of a Trump trade, but also option signaling. Look, it's going to 80,000 in November, no matter what the election outcome. But Ed, you're looking at the micro.
Yeah, there's a lot of headlines that's hit in the last hour or so. Tesla has seen a lot of volatility. Elon Musk speaking in Saudi Arabia at FII. And on the Trump trade, he said that actually if Trump gets to office, he's more optimistic. His lofty goals for SpaceX and Tesla will happen. We'll get to that later in the program. PayPal gave us guidance for the fourth quarter that missed expectations. We will dig into that later in the show. The stock on track for its biggest drop since February. And big tech in earnest, right? I think Alphabet, the parent of Google, is the main focus. It's not just the big AI name, but if you think about it in the stock context, Caro, it's been disappointing for many investors. They want signs that all the money being spent on AI will translate to that growth, particularly in cloud. We should probably talk about that.
We should, and someone's been writing about exactly that, as well as all the companies, of course, that are set to report. Reddit, AMD, Snap. We think of Google, though, in particular, as Ed was laying out there, maybe just trailing the Magnificent Seven peers, because investors are trying to struggle to price in antitrust risks and many others that confront the company. Ryan Velastelka is the guy who's been across this. And look, there has been this sideways movement of Alphabet's shares. How are people trying to think about any rosiness from the earnings dialing into the antitrust picture?
Good morning. Thanks for having me. So yeah, those are the two major issues people are focused on right now. Most everyone I talk to remains pretty positive on Alphabet as far as its fundamentals go. It's been showing improved results in its cloud business. Advertising seems to be fairly strong, which is of course key for the company's search business. But you do have the antitrust, the regulatory picture. There's been some, rulings against the company, and people aren't quite yet sure how to, price this impact. How severe is any punishment going to be? How long is this going to remain an overhang on the shares? What is the ultimate impact here? These are very unclear right now, and that is something that is, weighing on the stock right now and kind of preventing it from participating in the gains that you've seen in the other Mag 7 stocks.
Weighing on the stock, and it could weigh at the index level, right? You were writing over the weekend about how profit expectations for those Mag 7 names reporting this week are still way beyond the S&P 500 overall. But I think we're on track for our basically lowest quarter of EPS expansion in 6 quarters or something like that. How high is the bar? Like, how braced are we for this week?
Well, it's really a company-by-company kind of thing. In general, like you said, earnings growth for the Mag 7 is extremely strong, much stronger than the overall market, but we have seen a deceleration in growth. And given how much these stocks have moved up this year, you have some of the major index components, Apple, Microsoft, and so forth. These names are pretty expensive relative to their history, which does suggest there is a high bar here. When you have slowing growth, high multiples, that leaves limited room for error.
All right, Bloomberg's Ryan Velastelka. You've got to check out his reporting before, during, and after the big tech earnings beat. Thank you so much. Let's keep the conversation going with Jay Jacobs, head of thematic and active ETFs at BlackRock, which manages an astonishing $11.5 trillion in total for its clients. And same question to you. Alphabet's one name, but if you think about the broad basket of AI, hyperscaler, software, hardware, chip names that you track, how braced are you for this week, starting with Google?
Well, we're looking much further than just individual names. We have identified artificial intelligence and digital disruption as a multi-year, if not multi-decade megaforce that's going to have a tremendous impact on the economy and markets. So while earnings might have some directional information on how some of this investment from hyperscalers is going, some of the adoption of artificial intelligence, we're really looking 3, 5, 10 years out to see the landscape shifting impact of artificial intelligence on the economy.
Jay, Kara and I like looking to the horizon as much as anyone else. But when the hyperscalers talk about CapEx, the market responds in all sorts of ways. You must be a little bit excited or a little bit nervous about the next 24 hours.
Well, I think what will be interesting about all of this CapEx, which could be almost $250 billion, is that money is being spent on semiconductor companies, it's being spent on data centers, it's being spent on power infrastructure, and in some of our actively managed strategies like BAI, which just launched a few days ago, it's really looking at that infrastructure layer of artificial intelligence, where all of that CapEx money is being spent to take advantage of the revenue opportunities that we see today in artificial intelligence.
It's interesting, over in Saudi Arabia, many tech leaders, finance leaders are speaking. Masayoshi Son, one of them, talking about how NVIDIA is undervalued. Now, Jay, I know you've thought a lot about ultimately the investment in the picks and shovels. Are we too obsessed with one or two names? Do we need to broaden out?
I think we are. This is a much bigger story than just the Mag 7 and just a handful of names in artificial intelligence. We really look across the entire AI value chain or the AI tech stack to find opportunities. I would really bucket this in 3 layers. There's the AI infrastructure layer that I just mentioned. That's about the semiconductors. That's about the power infrastructure. It's about the data centers that are providing that physical backbone to artificial intelligence. The mid layer has also gotten a fair amount of attention. That's where the models, these large language models live, where a lot of the proprietary data lives. But then on top of that is the applications layer. And this is where we could see some of the most significant growth over the long term, which is really what are the companies that are embracing artificial intelligence to build revolutionary products and applications. And I think if you look across that AI tech stack, there's a lot of opportunity that goes far beyond just the Mag 7. And that's why we believe active management can be really powerful in artificial intelligence to pick and choose those opportunities.
Let's talk, therefore, about some of the latest ETFs you've launched and those within them to give the exposure. How broad are the names and how geographically broad are they as well? Is it all about the US?
So if you look at BAI, which is our artificial intelligence and technology actively managed ETF, it is largely focused on the digital infrastructure layer right now. That's where we see some of the most immediate opportunity because of all of that CapEx spending by the hyperscalers. That's where the flows of dollars are going today, and therefore kind of the most concrete part of the artificial intelligence opportunity. But it is a highly concentrated portfolio. It really only has about 34 companies in it. That is our portfolio managers really taking high conviction bets on which parts of AI are going to succeed.
And so by comparison, TEK is broader still, right? Because you have the full spectrum of software through to hardware, even the semiconductor names in there. What I always think about, Jay, is like, take the semiconductor space, right, in the context of AI accelerators. NVIDIA, Intel and AMD all compete with one another, but they all see this very expansive and enduring market. Why is the function of an ETF important to get the full benefit of that?
Well, because this is about an entire value chain of opportunity. On one hand, you want high conviction picks and the names that are going to win, but at the same time, it's not about one or two stocks in artificial intelligence. We believe a whole basket of stocks is going to benefit. And an ETF like BAI delivers that very efficiently to investors.
Jay, you've spelled out your long-term viewpoint. But in the short term, we have earnings. We also have an election in the US. From your perspective, is that a moment to actively invest, to change up the portfolio?
It can certainly introduce some volatility or uncertainty into the portfolio. But again, if we're looking thematically at artificial intelligence, this is an area where we see, this is longer than an election. This is longer than just the next 4 years even. This is something that's going to play out over multiple decades. So near-term volatility is really less important to thematic investors than what is the trajectory of artificial intelligence over the next several years, which we remain very bullish on.
Jay Jacobs, remaining bullish, head of thematic and active ETFs at BlackRock. We thank you. Coming up, we'll take a look at the volatility around Trump media shares as they push ever higher this morning. We'll have the details. Ed, what are you looking at?
Well, Elon Musk participated in a surprise conversation at the Future Investment Initiative taking place in Riyadh to discuss the future of AI, solar energy, but also why he thinks a Mars launch for Starship is more likely under a Trump presidency. Listen to this.
I feel more optimistic about it with a Trump White House than a non-Trump White House because the biggest impediment to progress that we're experiencing is regulatory is overregulation.
Shares of Trump Media, the operator of the Truth Social site, were suspended earlier today after they rose as much as 21% in pre-market trading. Trading later resumed. What's going on? Let's bring in Bloomberg's Bailey Lipschultz. I think we get this idea that there's this thing called the Trump trade and that DJT, because it's the parent company of Trump's social media platform, Truth Social, is a part of that. But explain the specificity of what happened this morning. I don't get it.
Well, Ed, nothing makes sense in meme land. So you have to go in understanding and acknowledging that. The thing with Trump Media shares, given the fact that Donald Trump owns about 60% of the stock, is that it typically trades closely with the betting odds. So we've been tracking a number of betting markets that have been shifting up and to the right for Donald J. Trump to return to the White House. What we saw today with some of those volatility halts, by my count, it was about 5 of them to the up and downside, is just simply an overwhelming amount of activity and volatility. We saw volumes about 6 times of what's normal in the first hour. So when you see investors, whether that's retail traders who are pushing their investments on things like Reddit or Truth Social itself, or Wall Street professionals, or even just options traders, that's what we can see with some of these wild swings to the up and downside. And just looking at today, it's really emblematic of what we've been tracking when you even look back to when this SPAC deal was announced back in October 2021.
It has generally been up and to the right, even if there is volatility on an intraday basis. 272% at least was the number we counted yesterday over the last 5 trading weeks. Is it really the eye of the storm when it comes to the so-called Trump trade? What other names have been involved in meme world?
It's the biggest one to keep an eye on, and it is really the most indicative. Obviously, it trades under DJT, that's Trump's initials. So the ticker symbol is actually that closely tied and aligned with the former president. We also keep an eye on Rumble. They are a Peter Thiel-backed video platform, typically skewing towards a more conservative audience, trying to also rally against big tech. The company is also in partnerships with Trump Media itself. We keep an eye on Funware, which really seems to be more of, at least when I talk to investors, more of a gambling mechanism. It was associated with some of the past Trump campaigns, though it doesn't appear to be tied towards the 2024 re-election campaign, but that also has gotten swept up in the shift as well.
Bailey, you wrote a story on October 25th, which I appreciate seems like an eternity ago now, that basically if Trump wins, it's hard to see what happens next with Truth Social and DJT, but I think you were talking more about its business. Like what do we know about this company as a company?
It operates and owns Truth Social, an X lookalike platform that is one of the many kind of places that Donald Trump will post. We do know, Ed, in the first half, they reported just about $1.6 million in sales, so not profitable. $1.6 million in sales or revenue is a drop in the bucket relative to its multi-billion-dollar market valuation. It has struggled to retain users. We've seen that with third-party apps. The company doesn't actually disclose those metrics. We will be closely keeping an eye on their third quarter results, which should be coming in the next few weeks, just in terms of what activity or at least what ad sales look like going into the election. But when I talk to some skeptics, Ed, they really call out the fact that all eyes right now are on Trump's re-election campaign. So if the company is struggling to get anywhere near turning a profit and only had $1.6 million in first half sales, the question going forward is how does that actually grow?
Bailey Lipschultz, we appreciate it. Thank you. Let's stick with politics because Jeff Bezos defended the Washington Post's decision to stop endorsing presidential candidates, saying there was a, quote, credibility gap afflicting the media industry and that endorsing a candidate would create a perception of bias. Now, the move by the billionaire owner of the Washington Post prompted as many as 200,000 subscribers to cancel. That's according to NPR. Bloomberg's Mike Shepard joins us to discuss. And Mike, I know you have a history with the Washington Post yourself. And just take us back in history. How long have they been saying that they support certain candidates?
Well, first, my own history. I did work at the Washington Post for 22 years before joining Bloomberg in 2011. So we do have some long-standing ties to that newsroom and a lot of the good people that work there. And the history that the Post has with endorsing candidates goes all the way back to when Jimmy Carter ran for the presidency. So there is a history and a tradition. And one of the concerns among people who are close to the newsroom and even outside observers is that this carries the appearance 11 days before the election of not just stopping the practice of endorsements, but spiking an editorial that was intended to endorse Kamala Harris for the presidency. And this carries the appearance of doing exactly what Jeff Bezos is trying to avoid, or at least as he explained it in his article yesterday.
Mike, just the basics here of why we're talking about this. Jeff Bezos, the founder of Amazon, a high-profile and incredibly rich person in the world of technology, and he owns the Washington Post. Just take those basic facts and explain the significance of this action.
Well, the significance cannot be overstated, and it is yet another twist in an election that has had a historic number of surprises already. And it even caught the attention of Kamala Harris this morning. She was interviewed on the Breakfast Club syndicated radio program, calling it disappointing, but then also tying Jeff Bezos, the world's second richest man after Elon Musk, to Donald Trump and other billionaires, saying, look, these are the people, the billionaires, that Donald Trump is more likely to support rather than mainstream Americans. And we do see our own analysis here at Bloomberg indicates that more billionaires have donated toward the Trump candidacy than non-billionaires. Now, when it comes to the tech industry, we do see a little bit of a reversal of polarity. We do see more of the wealthy tech founders, especially people like Eric Schmidt and Bill Gates. They have thrown their lot in with Kamala Harris. But overall, Harris is using this moment to point to what she sees as billionaires leaning toward Donald Trump.
One billionaire just name-checking Donald Trump over in Saudi Arabia, a live stream of Elon Musk. Just speak to the impact that he's making, Mike.
Well, his impact on the race cannot be overstated. First, it's financial. He has put more than $132 million of his own money into a super PAC that is backing Donald Trump. But he is also putting in something that's very precious for a guy who's running 5 companies, and that is time. He has spent time on the campaign trail in Pennsylvania and other states. He has been with Donald Trump, including at the event in New York at Madison Square Garden on Sunday. And he is seeing in Donald Trump as someone who can clear the path for some of his own ventures and his own aspirations, including a trip to Mars. And he sees the president as being former President Trump as, if he were to make a return to office, someone who could clear the path when it comes to regulations.
Yeah, well, that's the soundbite that we played earlier today. Bloomberg's Michael Shepard, thank you very much. It's time for Talking Tech, and first up, Indian food delivery platform Swiggy is seeking to sell shares for an IPO that may raise $1.35 billion, according to sources. The IPO will open for bids from November 6th, and shares are expected to start trading from November 13th. Swiggy's IPO follows Hyundai India's recent record sale. Plus, Toshiba wants to reach double-digit market share in the world's power chip market by 2030, as it lags behind rivals. Toshiba may eventually form an alliance of companies that would corner 30% of the industry, according to one of his executives. And over in Japan, Liberal Democratic Party heavyweight Akira Amari was defeated in the general election. It removes one from Parliament, one of the chip sector's biggest advocates, while concerns have been growing over the amount of taxpayer money getting ploughed into that industry. Caroline.
In other international chip news, Ed, the Biden administration have finalized restrictions on investments by U.S. individuals and companies into China Chinese technology, including semiconductors, quantum computing, artificial intelligence, of course. Bloomberg's Mackenzie Hawkins is here with more. And this was long in the making. Just what is new in terms of these policies?
So this is sort of the last big shoe to drop from the Biden administration's restrictions on Chinese advanced tech development. We spent a lot of time on the show talking about export controls, restrictions on the sale of actual chips and chip-making components to companies in China. This is restrictions on investments by American individuals and companies into Chinese AI, chip, and quantum computing companies. The rules have been in the works for over a year. There was originally fears that the investment restrictions would cover a broader swath of industries, but officials say they're aiming for a narrowly targeted approach, looking at technologies that are key to U.S. and Chinese national security.
It's been some time, I think, since we've discussed the sector in these terms, but the target is American mutual funds, large venture capital firms, other technology companies that want to get a placehold on some of China's tech, right? I'm trying to understand, Mackenzie, who would be subject to these controls.
Right. So there are exemptions for certain types of investments, such as publicly traded securities or certain limited partner investments. But the goal is really to capture American capital and the know-how that officials say comes with American capital going into early stage investments in Chinese startups. Officials briefed reporters on the restrictions before they were formally announced, and they pointed to a report by a think tank based here, which found that between 2015 and 2021, of all of the global transactions investing in Chinese AI companies, 17% involved American investors. And of that, around 9 in 10 were at the venture capital stage. So that's the type of investment that officials are aiming to capture with these rules.
The Chinese Foreign Ministry spokesman saying his nation strongly deplores and firmly rejects these new US restrictions. They don't come into force briefly until January the 2nd. Is there any way that these could be subject to change, Mackenzie?
So this is sort of the last leg of what has been a very long rulemaking process, and this is a final rule. So it's highly, highly unlikely that things would change between now and January 2nd. They wouldn't reflect only investments going forward. It's not a retroactive policy.
Bloomberg's Mackenzie Hawkins. We thank you. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Quick check on these markets, because while we're pushing higher on the Nasdaq and the Nasdaq 100, we're up about 0.5% now, so near trading highs of the day, and in fact trading highs ever, because we are close about 200 points on the Nasdaq 100 to its record high set back in July, so we keep an eye on those numbers. We want to dig into some of the individual movers, because we are thick and fast in earnings season, and really Cadence Design Systems doing particularly well, having its best day since March of 2020, up 11%, its numbers coming in strong, its revenue posting growth of about 19%, and it's all about Cadence.ai, basically in the design workflow, artificial intelligence now integral, says the CEO. We're seeing AMD. We're going to see the numbers after the bell. And look, we're pretty buoyant and running into them, more than 2% higher. The question is, AI accelerators, are they managing to make inroads on NVIDIA? And how much of the market share have they managed to take from the likes of Intel when it comes to the PC and it comes to the server business? And PayPal, look, disappoints. Even though we saw the fiscal third quarter do well in terms of profits, well, the revenue forecast disappointed and the shares have run up into these earnings. We're off by about 5%, Ed. What have you got?
Some other headlines in the last 30 minutes. Apple's overhauled the design of its Mac Mini desktop computer for the first time in about 15 years, cutting the device's size to 5 inches across and adding a speedier M4 chip series. Bloomberg's Mark Gurman joins us in San Francisco. This is kind of consistent, right, with what Apple is doing with new gen of different hardware platforms, size, and then updating the processor. What else do we know?
Yeah, it's quite interesting. So last year, this time, they held an event called Scary Fast, timed around Halloween. They launched 3 new chips, a bunch of new Macs, but it was a 30-minute keynote, and it sort of disappeared, as you will, on Halloween right after that. This time around, they're doing 3 launches 3 days in a row. Yesterday, Monday, was the iMac with the M4. Today is the Mac Mini with the M4 and M4 Pro. Tomorrow it will be the new MacBook Pros with the M4, M4 Pro, and M4 Max. This new Mac Mini looks extremely impressive. this, probably the most impressive new Mac that I've seen from them since the current MacBook Pro design launched 3 years ago. 2 inches tall, 5 inches across, super cool, super powerful. 2 ports on the front now, matching the Mac Studio.
As you reported would be the case.
Yeah, I think this is going to be a very hot seller. People like to use these to connect them to TVs, gaming setups, and they're also extremely popular in the enterprise and in server environments. So this is a nice launch for Apple.
A nice launch and necessary when you're baking in the market's expectations for growth of this company. We had KeyBank, the analyst there last week, saying, look, we very rarely have geographical growth and every product growing in terms of revenue, but the market seems to be baking that in. Mark, how likely is it that we're going to see such growth, do you think?
Well, the Mac Mini is only going to be a very incremental part of that, right? They'll generate sales here, but probably they'll sell maybe $1 billion worth of these, tops through the end of the year, maybe even a little bit less than that. So this is not a super material launch for them. It's really a cool launch that gets people in the Mac community really interested. It sets up the design for this product, hopefully not for the next 15 years like the last design, but certainly this is a nice launch for them. But it's not important from a financial standpoint, like, let's say, a new iPhone or iPad.
Mark, overnight our colleagues in India reported some interesting numbers about exports from that country for Apple. So not necessarily the end market, but what they're doing there and then selling to the world. What do we know?
India is becoming an increasingly important part of the overall Apple story in terms of production and in terms of sales. I think you're one day going to see more product development happen there as well. They have some engineering labs, particularly for maps testing there as well. So India is incrementally becoming a bigger part of the Apple story. I don't think they're ever going to drop China totally, but they're inching towards India becoming the new China.
Mark Gurman, we thank you. Let's turn our attention to Netflix now. It's in talks to release Greta Gerwig's upcoming remake of The Chronicles of Narnia on IMAX screens globally. This would be one of the streaming platform's biggest business deals with cinemas, according to sources. Let's bring in Bloomberg's Lucas Shaw. And they have done it before, but this would once again be sort of an interesting area for them to push.
Yeah, look, Netflix has largely embraced movie theaters when they have worked with filmmakers that want that. Think about Martin Scorsese with The Irishman or Alfonso Cuarón with Roma. This is no different. Greta Gerwig, coming off of Barbie, has a lot of clout in the Hollywood community. Netflix was very excited to get her to adapt this sort of legendary series of children's books. But she wants to see those movies in theaters, and so Netflix is going to try to work with her without sort of violating its beliefs about putting movies on its screens and on its streaming service promptly for its customers.
Lucas, I don't think we've ever had the chance to discuss this with you, but basically, how does Hollywood see Netflix in this field of big fiction? I think about Rebel Moon and Atlas that had Jennifer Lopez. Personally, those were great, but I guess they weren't big hits the world over. Narnia?
Well, Atlas actually was a reasonable hit. I mean, I think, yeah, you're right that Netflix has tried a lot with these sort of world-building science fiction projects, largely because it doesn't sit on a trove of historical intellectual property like Disney and Warner Brothers and other studios do. So it's had to invest a lot more in original properties. When it has gone outside of that and tried to buy IP that it could use, like it did a deal with the Roald Dahl, now it's done this Narnia. I mean, look, it could work. I don't know. Their track record on the quality of those movies, I'd say, is sort of mid to poor. But people do tend to watch them just because people watch whatever is on Netflix that has a big budget and Netflix puts in front of them.
Well said. It's interesting what they lose because of not always going for the big screen. Emerald Fennell, for example, her new Wuthering Heights, they didn't want to go in Netflix because of this. So is IMAX going to satisfy Greta Gerwig, do you think?
Yeah, I think it'll satisfy her for this project. I don't think Greta Gerwig will want to make all of her movies at Netflix or her next several movies at Netflix. I could be wrong, obviously. If this becomes a huge success and she wants to do it again, she could. But what we've tended to see is big-name filmmakers like Greta Gerwig, like Alfonso Cuarón, they want to see their movies in theaters, and so they will mostly do that. But if there's a project that they are particularly drawn to or that no other studio will make and Netflix will step forward, they'll do it, and especially because Netflix will often satisfy the budgetary requirements that they have or want. But it's sort of a temporary way station for a lot of these big filmmakers and not a home, whereas Christopher Nolan, for example, another filmmaker, likes to find a home, right? He was at Warner Brothers for several years. Now it seems like he's going to be at Universal for the foreseeable future.
Well, they got money spent, what is it, at least 175 million on this Narnia one. Lucas Shaw, we thank you, Ed.
Yeah, coming up on the show, how a Spanish brain-computer interface company is taking on Neuralink. That's one we're looking forward to, Caro.
Yeah, meanwhile, what's in the here and now, Ed? Bitcoin, crypto, you've been keeping a close eye on it, as we all have. Look, at one point it touched $72,000. We haven't done that since April, but we are very close to the record high set back in March of this year, which was close to $74,000, just under it. Will we get there? We're up 3%. Options traders think it's going to get to 80,000 come what may in the election by the end of November. This is Bloomberg Technology. We hear a lot about Elon Musk's brain-computer startup Neuralink, but it is far from being the only player in the field. Take InBrain. It's a European company building devices that could one day treat neurological disorders like Parkinson's disease. The startup just announced today that it's raised $50 million to develop its graphene-based neural technologies. Let's bring in the CEO, co-founder, Carolina Aguilar, for more. And Carolina, just how soon might we see such things as Parkinson's and other diseases tackled, and how?
Thank you. Thank you for having me here. And hello, New York. Well, very soon, because we already treated 2 patients on our safety study. And last year, we already obtained FDA breakthrough designation. So we actually provide to the FDA reasonable proof of superiority versus current neuromodulation. So it's, this funding round, which is significant, is going to help us to get there in the next few years.
Let's go back to basics really quickly. So Synchron does this sort of intravenously with a stent. Neuralink is the insertion of very, very thin wires directly into the brain. How does your technology work?
Yeah. Well, it is a technology that sits on the brain, on the cortex of the brain, and also has a deeper probe that it's inserted more into the basal ganglia. And together, actually, it's able to decode in a bidirectional communication with the brain specific biomarkers that are disrupted in diseases like Parkinson's disease and actually restore such function. So we call it BCI therapeutics because this bidirectional communication with the brain is actually able to decode, so to read, but also write into the brain and actually restore the function.
We're showing a video which is demonstrating that right now. So $50 million, in your development process and scaling of the technology, where will you deploy that money?
Yeah, these funds are extremely important to continue the clinical trials that we are now conducting. We are onboarding up to 10 patients for this safety trial that also is going to show the superiority of graphene versus current metals like platinum and iridium. To expand the team, because we need very much excellent talent across boards. As you saw, we are developing the semiconductor process of the interfaces, but also the electronics, the software, the artificial intelligence. So we have already 60 people, but we are missing some key pieces that we would like to recruit. And also to continue the platform development to the final pivotal that leads to the commercialization.
So many people listening will be so excited at the idea that Parkinson's disease, that epilepsy, that strokes can in some way be tackled with this. Who from a venture community is excited to put the money in? Where is the ultimate return, the reward for them when it comes to your own growth?
Well, we are seeing deep tech funds very, very interested on this field. I think in the past it's been a traditional healthcare, medtech, VC-driven world, and now deep tech with the emergence of semiconductors is also willing to chip in big time into the development of such ventures. At the end, we are at the convergence of medtech, digital, but also this semiconductor world. Now the CHIPS Act, it's fueling also a lot of money in the US, but also in Europe. This community has bigger funds and is willing to make this happen.
Carolina, what's the regulatory environment like for this in Europe, relative, I guess, to the United States, where we'll see this in the real world first?
Yeah. We are regulated by the medical device regulatory bodies. So for us, it's very important to get, for instance, what we call a CE mark. It's a very similar process to the one in the US. However, I think in the US, there's been a tremendous progress with FDA actually being extremely supportive with the FDA Breakthrough Designation Program, but also the TAP program that we belong to. And basically, we are able to meet monthly FDA to discuss some of the hurdles and the questions that we have in order to develop this commercialization at the speed. So artificial intelligence is one of the subjects that we've been treating in the last months, month after month. And this is something that Europe still doesn't have, but I hope that it's coming soon because it's extremely useful for innovation and to not get people lost, which is also a waste of money.
InBrain CEO and co-founder Carolina Aguilar, thank you so much. SoFi Technologies raised its profit guidance for a third time this year as it benefited from efforts to expand beyond its student lending business. Here with SoFi and its results right now, down 7%. I think the bar was pretty high going into this, but that does put it on track for its biggest drop since August. What's going on? Let's ask the CEO, Anthony Noto. And Anthony, the story in the quarter gone, it's kind of the result of the work you've put into SoFi doing more. Just explain that a little and where you're bearing fruit in sort of diversifying business lines right now.
Sure. First, to your point about the stock was up about 40% in the last month, so it came into the quarter after a very big increase in value over the last 30 days. And so I think we're seeing some of that being taken off the table. But we had our best quarter as a public company. We had record revenue. The growth rate of the revenue accelerated to 30% year over year. That growth was driven by 64% year over year growth in our financial services and our technology platform revenue taken as one. That now accounts for 49% of our total revenue. And so we're not just a lender anymore is the key message, and this is a historic day for us. Not only is it historic revenue, but we're to that 50-50 split between lending and non-lending that we wanted to drive to really continue to diversify our revenue. We've been able to overcome a really tumultuous environment over the last 5 years to deliver 17 quarters of record revenue growth and improving profitability. And we finally got to the point where the business is 50-50, which is right where we wanted to be. The strength is really driven by the financial services products growing 37% year over year, and that's driving the revenue growth that I mentioned.
Part of the sort of slowdown response in the stock, I think, is some investors looking at your comments about balance sheet growth, longer term, low single digit growth. What would be your response to that, please?
We want to grow our revenue 20 to 25% compounded annually. So there's a lot of different drivers to get there. We do not necessarily need to grow our balance sheet at that rate. And in fact, we don't plan to grow our balance sheet at that rate. We've made a migration to more fee-based revenue streams that are capital light and high ROE. This was our first large quarter of generating loan platform business revenue. It's a business we've been in since 2019, but it was a big contributor to both our growth in revenue as well as profitability. So we don't need to grow the balance sheet faster than it has been growing. In fact, we want to take risk off the table and leverage the other pieces of our businesses, or other pieces of our business that are fee-based. In the quarter, about $175 million of our revenue was from fee-based revenue and growing a meaningful amount year over year.
Let's just talk about pulling that lever, and indeed a 64% jump in the financial services and the tech platform segments. Where else can you invest there to ensure that that 64% is something you continue?
Sure. Within the financial services segment, we have several businesses. We have our SoFi Money business, which is benefiting from a high interest rate. We're seeing great growth in deposits, $2.4 billion of member deposit growth, really strong spending, annualized $10 billion of spending. And so we'll continue to grow that member base at a really high clip. Second is our invest business. It's also growing meaningfully year over year. We also have our credit card business, and of course, our business that provides referrals to other financial financial services product, which we call Lantern, and then, as I mentioned, the loan platform business. That business itself grew over 100% year over year, and it's annualizing now at $1 billion with really strong improvement in profitability. So we'll keep driving product and member growth in that business in the 30+% range, and that will then follow with revenue growth at or above that level over time.
Talk to us about the macro, because you're saying to investors you feel really good about the current environment, that headwinds have dissipated. Anything that worries you? I mean, we're all still bracing for an election, and that feels like quite a lot of lack of transparency.
Yeah, I do think there's still a degree of uncertainty out there, but I think the trends are clear that we're going into a declining rate environment versus an increasing rate environment. And in a declining rate environment, we have several businesses that will benefit meaningfully. Our home loans business will benefit from more refinancing. Our student loan refinancing business will allow people to refinance their student loans at a lower rate in a lower rate environment. And so those businesses will have a tailwind for sure. In addition to that, as rates come down, the rates that other competitive banks are offering their members or their clients will also come down. And we will be able to maintain a superior rate compared to them because we also own the lending origination platform. So we can use the two of them as a competitive advantage to drive a better APY than our competitors broadly defined. And then lastly, within that business, there's our credit card business. We just launched 2 new credit cards that we think uniquely meet the needs of our members that have a lot of growth prospects behind them as well.
Anthony, what's your M&A plan from here for things you don't already have?
We're heads down. We're not focused on M&A at all. We're not focused on capital raises. We're focused on growing our business organically, 20 to 25% in revenue on a year-over-year basis, balance sheet growing much slower than that, and continue to build unaided brand awareness. Our unaided brand awareness is a key to become a household brand name. It's a key to become a trusted partner in a business where people have to trust you to give you their money. And we've driven that up 40% year-over-year to 7%. Our goal is to get it into the 30% range. We're well on our way and making great progress.
Have you got any worries about the consumer at this point, Anthony, and consumer credit quality?
Sure. Our credit has actually continued to improve. We saw a peak in credit normalization in Q1, and it's gotten better each quarter since then. That said, we're very vigilant in making sure that we think we'll be in a stable economy. Declining rates with a recession would not be great. Okay. Declining rates with a stable economy would be great, and that's what our current forecast has for 25.
Anthony, we literally have 30 seconds. The election, how are you braced for it?
We can work with whatever administration we have. There are different characteristics of the administration that could be more favorable for our business. I would say generally more favorable capital markets would be welcomed. More favorable treatment towards businesses would also be welcomed. There's a lot of opportunity that sometimes gets stifled by different approaches as it relates to capital markets, to M&A from the different agencies. So we're looking for a good balanced approach from whatever administration wins, but we're prepared to work with both ends of the aisle.
SoFi CEO Anthony Noto, thank you so much for joining us on your earnings. We appreciate it. Now that does it for a very busy edition of Bloomberg Technology, and more earnings coming thick and fast after the bell, Ed.
Yeah, that was a good way of ending it, though. A really interesting conversation. Recap on the podcast. You know where to find the pod. It's online on all the platforms you'd expect. It is going to be a massive week. The mega cap tech earnings start in earnest after the bell. From the team in New York City and the team out here in San Francisco, stay with us this week. This is Bloomberg Technology.